If you are someone who likes to make investments that are paid back in cash every month, this video is perfect for you. Today, we'll discuss 5 of the best dividend ETFs, exchange-traded funds, that pay monthly dividends. If you are familiar with this channel, you already know that in the description below, there is a table linked to these and several other ETFs, so you can look them up for yourself. A person who enjoys dividend investing is primarily likely to fall into 2 categories of investors. One is looking for a solid investment that pays regular cash to help with living expenses, and the other sees the potential to reinvest dividends for growth in good times and bad. It's a person. If you belong to a different category, please let us know in the comments below. Before we discuss the top ETFs, let's start with a quiz. If he has 2 ETFs that pay monthly distributions, which one has a higher total return over the year? His first ETF has a total return of 9% and a dividend yield of 3%. The second ETF has a total return of 6%, but a dividend yield of 11%. What will give you better returns at the end of the year? The answer is the first ETF with a total return of 9%. Some may argue that it doesn't take dividend yield into account. This suggests that the 6% yield plus his 11% yield is better than the initial yield. However, this is a common misconception. Since total return already includes reinvested dividends and deducted costs, you can calculate the compound annual growth rate, CAGR, of his ETF today in 3 ways: price return, dividend yield, and total return. Indicated by, it's important to understand what he's investing in, especially ETFs and high dividend stocks. Research is the key to understanding its true value. Let's start with the first ETF, JP Morgan Nasdaq Equity Premium Income, JEPQ. This relatively new fund focuses on large U.S. companies in the Nasdaq 100 index and invests up to 20% in equity-linked bonds from banks and brokerages to increase cash flow. His major holdings include high-growth companies such as Microsoft, Apple, Alphabet, Nvidia, and Meta. Despite its short history, the stock has seen healthy growth in price CAGR and total return CAGR, outperforming the S&P 500 over the past year. Next, let's talk about the SPDR Dow Jones Industrial Average ETF Trust, DIA. The fund invests in 30 blue-chip companies across sectors including technology, financial services, and healthcare. His 12-month, 3-year, and 5-year CAGRs are solid, but slightly behind the S&P 500. With a beta of 0.81, it is less volatile than the market, making it better suited to weather market fluctuations. It is a solid ETF with a low monthly dividend rate, the lowest expense ratio at 0.16%, and good historical performance, but the dividend yield is not very high. The third ETF is the Amplify CWP Enhanced Dividend Income ETF, DIVO, which invests in S&P 500 companies and generates income from dividends and option premiums. Fund managers write call options to increase returns. Its largest holdings are well-known stocks in the S&P 500. Although the fund's performance over the past 12 months and 3 years has been modest compared to the S&P 500, the price has increased year over year, suggesting a healthy, sustainable ETF that trades dividends every month. Yield is over 4%. Next is the JP Morgan Equity Premium Income ETF, JEPI, which generates income by selling options on large-cap stocks in the United States. This strategy can reduce market volatility, but may reduce overall returns. The fund also includes high-growth technology companies, but they fell short of the S&P 500's performance, in part due to a difficult technology market in 2022. Still, JEPI offers a healthy dividend yield of his 8.26%, although overall growth is slightly limited due to the option strategy. Finally, there's the Wisdom Tree U.S. Quality Dividend Growth Fund, DGRW, which invests in large and mid-sized dividend stocks such as Microsoft, Johnson & Johnson, Procter & Gamble, and Coca-Cola. Performance has been solid in terms of both price and total return, with 12-month, 3-year, and 5-year CAGRs showing solid growth. Although the company has the lowest dividend rate in the group, it has an excellent 5-year total return, making it the company with the highest long-term growth in the group. To summarize, let's compare these ETFs. 1 JP Morgan Nasdaq Equity Premium Income, JEPQ. This ETF focuses on U.S. large-cap companies from the Nasdaq 100 index, including high-growth names like Microsoft, Apple, Alphabet, Nvidia, and Meta. It also invests up to 20% in equity-linked notes from banks and brokers to boost cash flow. Despite being a relatively new fund with limited history, it combines impressive growth potential with a strong dividend yield, making it a compelling choice for those seeking both income and growth. 2. SPDR Dow Jones Industrial Average ETF Trust, DIA. Investing in 30 blue-chip companies across technology, financial services, and healthcare sectors, this ETF offers a low expense ratio of 0.16% and lower volatility, with a beta of 0.81 compared to the overall market. 3. Amplify CWP Enhanced Dividend Income ETF, DIVO. DIVO invests in S&P 500 companies and generates income through dividends and option premiums, with fund managers writing call options to enhance income. Its top holdings are major S&P 500 names, and it offers stable growth and a healthy dividend yield above 4%. 4. JP Morgan Equity Premium Income ETF, JEPI. This ETF employs an option strategy, selling options on U.S. large-cap stocks to generate income and buffer against market volatility. While this approach results in a high dividend yield of 8.26%, it slightly limits overall growth. 5. WisdomTree U.S. Quality Dividend Growth Fund, DGRW. DGRW focuses on large and mid-cap dividend-paying stocks like Microsoft, Johnson & Johnson, Procter & Gamble, and Coca-Cola. With robust trailing 12-month, 3-year, and 5-year CAGRs, it delivers strong long-term total returns. For a detailed comparison, you can check my spreadsheet linked in the description. It includes estimates of returns over 3 and 5 years on a $10,000 investment, considering scenarios with and without reinvested dividends. However, note that taxes are not factored in. If you're interested in high-growth ETFs or top ETFs across all 11 sectors, check out the videos linked on the screen. Thanks for watching and supporting the channel.